Hi, everybody. Quickly, show of hands. I know Gil stole my thunder a little while ago, but who here owns any cryptocurrencies at all? Slim number.
Relatives count?
Relatives count. The kids, okay.
Who has heard of Bitcoin? Ethereum? Solana? Okay.
Better turnout. Okay.
NFTs? Or who here has mined any crypto?
That's a great question. Wow, really? Are you excited for the halving? Probably not, actually. It's diminished so much you can pay. So this is a less formal discussion than what we've had throughout the day. We've had panels, we've had a keynote speaker, obviously. This is a little more casual. If anything we say jumps out at you want to ask a question, please. We'll try to make this as a two-way street as possible. We don't want to just sit here and lecture at this hour of the day. But when I talk to people about their experience with blockchain, and Tracy, this question is actually for you. As somebody who's been so involved in the space for the past few years, and being with CoinDesk, which is one of my favorite websites, what was your aha moment with cryptocurrency? What was the inciting incident that made you want to devote so much attention to this field?
Yeah, so I first learned about crypto. I previously worked on Wall Street, and so in 2017, I was an intern at this trading firm. And it was kind of an intern side project. It was the summer in which Bitcoin had passed $10,000, and they gave this kind of fun research project to the interns to kind of keep them busy. And it was to learn about crypto and give a presentation. And so that's how I was first introduced to it. And I remember taking my earnings from that summer at my internship and trading it on Coinbase just for fun. And I would buy it, and then that was the year in which Bitcoin hit almost $20,000, and it would just double and quadruple. And I was for a college student, I thought, wow, this is a great way to make money. And then it went all the way back up. And so I think it was a fun experience, and that kind of first got me interested in crypto. But like I mentioned, I didn't really cover it as a journalist until 2021, which is when an even bigger crypto craze began. And the way I thought about kind of covering crypto is I went to this conference. It was the Bitcoin conference in Miami, and this was in May 2021, in which it was almost peak bull market. And I went there and I met all of these. At the time, I was covering business and finance, and I noticed that all of these hedge fund managers were interested in crypto. And I always thought that hedge funds were very forward-looking. They're usually the people in finance that are always on to the next big thing, whether it be SPACs or crypto. And I was like, it's interesting, all these hedge fund managers are trading crypto, they're doing stuff in DeFi or decentralized finance. And so I convinced my editor at the time to send me to the Bitcoin Miami conference. And it was also right after the pandemic, so it was really people were really excited to be in person. And I met all of these people that I thought were kind of crazy. And I think, if you are a journalist, you want to be covering a sector that's emerging, where things are happening, where there's lots of volatility. And so I thought, what's the most interesting story in finance? And I thought it was crypto. And so that's when I joined CoinDesk after to just be covering that space full time. And I am kind of curious about the way you also look at it, because there's a saying in crypto or anywhere that when there's a gold rush, you don't necessarily want to be panning for gold, you want to be selling the picks and shovels. And so it's interesting that you, Kyle, you work at a law firm, and I think law firms advise rising crypto companies have been doing really well in the past year as everybody is getting sued. And so I think it is surprising that the both of us up here, we don't necessarily work for a crypto company, we work for crypto adjacent functions that have benefited massively off of this big crypto bubble.
That's exactly right. And before I say anything further, nothing that I say is meant to be construed as legal advice, and definitely not investment advice, so just take it with a grain of salt. My journey was, I guess, somewhat similar in that I sort of fell into it. I find it very personally and professionally interesting. It's something new and different. We're lawyers. We look at contracts all day. My partner Jeff in the back will tell you, if neither of us have to look at another operating agreement, it can't happen fast enough. So you have this new technology with new ways that can be adapted into our day-to-day life, and that just by itself makes it worth noticing. Not everything like that is worth noticing, but just look at how far it's come in a couple of years since you've been working on it. Look where we were just 2 years ago, and look where we are now. And I think that for people out there who kind of know what it is, but they aren't really sure, you don't really need to understand the technical aspects of what Bitcoin is or what an NFT is from a technological standpoint. We can talk about ERC20 tokens and we can talk about Bitcoin halving and all that stuff. I don't think that's necessarily relevant to just a basic understanding of what it is. However, as far as this conference goes, what this technology can mean for business-to-business transactions, for how we conduct transactions where money has to go from point A to point B, insurance contracts, real estate, all of these things can really be benefited by the implementation of blockchain technology. That's sort of the overarching thesis of why we think it's interesting and why we felt this was an important topic for this particular conference. You talked about SBF, or you covered the SBF trial, the Sin Bank Food trial, and to me that's, as interesting as it is, that almost does a disservice to the technology because people who aren't familiar with it, that's all they see. They see this guy who had a $25 billion company and he took some of the money and he invested in his own private investment fund and defrauded a lot of people, and to them that's all it is. So for you as a journalist, I would be curious as to how you cut through that. How do you inform your readers that that's not all it is when it's such a high profile matter? Put you on the spot.
Yeah, I think to backtrack a little bit, a lot of the headlines surrounding crypto over the past year have been relatively negative. It's, the price has gone down and every time there is a new negative headline, although maybe we'll talk about this a little bit later, it seems to be perking back up a little bit in the past month. I think, one of the themes of this conference is about regulating new technologies. I think, regulators have done a pretty bad job doing that with crypto. A lot of retail investors lost a lot of money, both in FTX, but also there's like 5 high-profile bankruptcies happening right now in crypto. And that, if you're the SEC or a regulatory agency and you see that there's this, 31-year-old, he's a billionaire out in the Bahamas running a not US licensed crypto exchange, and turns out they were embezzling $8 billion, that doesn't look good for you. And so I think part of the strong reaction we're seeing, all these enforcement actions, a lot of these lawsuits, every 3-letter agency suing bad actors, it's part of kind of, you're a regulator, you kind of have egg on your face and you need to issue a strong response. And so for the past month, I was actually in the courthouse every day in New York covering the SBF criminal trial, and one theme was just how fast it was. Normally fraud trials, in the case of Theranos, it took several years, and SBF was found guilty, and so it was on the 1-year anniversary of the bankruptcy, not even. And so it's just the response we're seeing in crypto is just kind of this rapid, negative, we need to, clear out all of the bad actors. And I think that's working. I think, every cycle, the price goes up, there's a lot of bad activity that happens, and then when the price goes down, you see a lot of bad actors being flushed away.
I think that's a fair point. We do have the SEC and all the governmental agencies trying to calm down. I think a lot of it is reaction. I think that it is reaction. You look at other jurisdictions. Europe just passed, what seems to be good regulations that make sense. It hasn't gone into effect yet. But it's called the MiCA, the Members in Crypto Assets. I think that's what it's called. They passed it a couple months ago, and it details how you go about selling these products in a manner that makes sense for retail investors. You have to disclose information about what you're doing, similar to a regular capital raise that you would do here in the United States. When you want to raise money to buy property somewhere, you have to give people the information they need to make an informed decision. That's kind of what Europe did. But the SEC isn't doing that. They're saying, oh yeah, these rules over here that have existed for 100 years, these are your rules. And it's trying to fit a square peg into a round hole, which if that's not the ultimate government action, then I don't know what is. How to make it work with government. A lot of you people do that system. And to me, that the problem with doing that is they approach these things with just one huge brush. Everything gets kind of swept up into this cryptocurrency. You have NFTs, you have tokens, you have stable coins. You have different things that have different risk profiles, different reward profiles. If you just say, you're crypto, you're bad, and I'm going to make sure that you never see the light of day again, that just doesn't do a service to the industry. It doesn't do a service to the people who believe in technology and understand what it is. When senators and people high up in government go on and say crypto is bad, yes, there are bad actors, as there are with anything else. People can use automobiles for bad. That doesn't mean that they are bad in every sense of the word. They are regulated. We know who has what. If you can adapt common sense regulations in the United States with respect to these projects, we'll be onto something. And sadly, we're just falling behind the rest of the world in a lot of this stuff. You're seeing these high-profile exchanges, these really successful companies. They're going to the Cayman Islands. They're going to Singapore. They're going to Bulgaria. Bulgaria is doing better than we are. I'm sorry, that doesn't make any sense to me. No offense to Bulgaria. Sorry.
I mean, one thing that's kind of interesting about the regulatory environment in the U.S. regarding crypto in particular, it's kind of become quite political. And so the two, like a very big question in crypto for the past few years has just been like, what is it? Is it a security? Is it a commodity? And based off of that classification, it determines what you can do with respect to, like launching a new token, where it trades, and most importantly, which regulatory agency gets to set the rules for that. And so, the SEC, they have their own agenda, and the CFTC, they have their own agenda. And so what's kind of happening in the backdrop of crypto regulation is these two agencies there's like a power struggle. And so that's one part of the crypto regulatory equation. It's just, I think the crypto industry in general wants them to be regulated as commodities, while the SEC is slightly more powerful, and they kind of view these things as like securities. And the other thing that I wanted to say about regulation is just, if you're a regulator and you're tasked with regulating this new technology, it's a very challenging job. And so, on the one hand, a lot of people in the industry like to point fingers at regulators, but I understand that it's very challenging because, these new technologies, and especially crypto, it could potentially disrupt the financial system. And so you have decades upon decades of like market structure, and for all intents and purposes, when you buy, like the equities market is, fairly well constructed, in that like there's many different parts to it, but it seems to function fine. And so if you make a wrong step as a regulator and you just completely screw up like the existing, what if a share of Apple now trades as a crypto on a blockchain, like a crypto token on a blockchain, you're very worried for what that could bring to kind of the existing markets. And so I think what we're seeing right now is just kind of a lot of, dragging their feet, not really kind of issuing any comprehensive legislation, not issuing a comprehensive framework, and that also has a downside when you're dragging your feet, because then you have these companies blow up because they've been kind of operating in a gray area.
That's a great point. I'll get to it in 1 second, Carlos. That's a great point. It's kind of a catch-22 because the SEC is the one that's imbued with these enforcement powers, and they can go after people that they deem to be violating the federal securities laws, which seems easy on its face, but it's not. And you're seeing a lot of pushback from certain political circles. They're saying, the SEC, you're political appointees. You can't be deciding how these things are governed. We tell you what to do, and then you implement that. But they haven't given them anything to work with respect to these assets. So the SEC either does nothing and bad actors can run rampant, or they do kind of what they're doing, and people who are making good faith efforts to comply with the existing framework are just getting killed. A pretty high profile case was called Library. They got sued in, I believe, New Hampshire in federal court sometime last year. The SEC brought the action. And those guys did what they thought were right under the existing regulatory framework. They were giving disclosures to the people who were receiving the tokens that their company was issued. They were giving fair warnings that you may lose all your money, doing things that you do in a traditional securities offering. And the SEC came after them, and they lost, and just a couple of weeks ago, they just shut down and liquidated the whole company. And they tried their best. And to me, that's where the problem lies. And I realize I'm an attorney, but I've been talking to the SEC. I think they've really been overstepping a bit in some of these things. And with Gary Gensler, who's one of the 5 commissioners over there, he's basically the de facto chair, when he comes out and says, we have an existing framework, all you need to do is come in and talk to us, and we will help you register. Excuse my language, that is absolute bullshit. If you walk into the SEC, they will hand you a subpoena, and that's the end of your company. It's ridiculous for them to take that position. Carlos, you had a question.
So you both spoke about the SEC fighting for turf on who gets to regulate what. It feels like it wasn't so long ago that nobody wanted to touch crypto. Did this come about, this kind of fighting for territory, did this come about after there was public embarrassment, that there was a public need to mitigate these really public-facing threats?
It's an interesting question. There's probably no one answer to it. On the one hand, you have a lot of people who have lost a lot of money, which is certainly going to draw Sauron's eye when you do these kinds of things. So that's one. Secondly, the cynical view, and this is a very unofficial, off-the-cuff response you asked, and I'm going to answer it. You have a lot of very interested institutional players in this space that are kind of waiting for regulations to come out, and they can't go in. You have pension funds. They can't invest in these things. The second regulations come out, it's $1 trillion of capital overnight into the system. So if you put the kibosh on what the people are doing and treating it like the Wild West, you can at least open the door for some regulations to come forward, and now some of the bigger players to come in. That's just a theory I have. Don't quote me on it, but it's possible.
I feel like a lot of the turf war has been in the past few years. Because if you think about it, Bitcoin was invented in the wake of the 2008 financial crisis. So, and really Ethereum, like if you think about the early days of crypto, there was only really Bitcoin for many years, and then there was Bitcoin and just Ethereum, and now there's like hundreds, thousands of tokens. And so, really, I think the SEC has kind of conceded the turf war on Bitcoin. It trades the future, and so it has kind of been a CFTC regulated, or at least that product. Right now, that's the only regulated product, which is Bitcoin and Bitcoin futures. There's now, at least with the past cycle, in 2017 and to a certain extent, and also in 2021, you had all these like Dogecoin, Dogcoins, Dogcoins and Solana, Avalanche, like all these, like a long tail of assets. And I think once that market, I mean, Bitcoin is still by market cap the largest cryptocurrency. But in the past few years, there have been new tokens. And so before, like, there was really not that much of a war, but now there's like all of these, if you are the agency that gets to regulate all subsequent token launches, then there's kind of incentive for you to want to go after that. Kind of like stand your ground.
I have a question, actually. I'm not sure if it's for Kyle or Tracy, but so we hear so much, and the conversation is so dominated by just raw capitalism, right? It's going through the boom and bust kind of deregulated stuff. But on the other side, especially when you get to the decentralized exchanges and the practitioners of blockchain, the real believers, smart contracts in particular, there's this infectious, optimistic altruism and desire for social change and doing good. You never hear about that. But where's this going to land? Like, or is it about making money, or is it about changing the world?
That's a great point. And I go to a lot of these conferences all over the world, crypto conferences, Decentral Consensus, Bitcoin Miami, all of those, Art Basel, there's a lot of them. And you're right, the enthusiasm is always infectious. Even when things are really tough during the bear market. And if anything, the bear market only highlights what you're talking about. Because when prices are down, a lot of people put their life savings into starting some of these companies and some of these NFT collections and so on and so forth. So when the bear market happens and they're still believing in technology, it's actually inspiring in a lot of ways because they do really believe in it. And that goes to the heart of what blockchain technology is. It's not about cartoon pictures of your cat that sell for $200,000. That was a sort of blip in the grand scheme of what this technology is and what it can mean. People who powered through the bear market and are still here and are still developing and still doing the thing that makes this technology work, they understand it, and they're going to be the ones who reap the rewards when the thing does come back full circle. But to your point, where is it going to land? Is it all about making money? I mean, look, I'm a lawyer. I don't eat cat food. I'm not going to pretend to be an idealist about some of this stuff, but there are real world applications, and when people on a mass stage are able to understand how it works and how it can be integrated into their lives, I think that'll really answer the question. It's just going to take a while, unfortunately, because you're right. All we do is hear the negative. Not just this, but everything.
Is not the purpose of cryptocurrency to engage in transactions that will not be detected by any of the central banks, so that you can conduct business without interference and the fear of regulation from any of those banks? And that's the value of it. And the prospect of regulatory authorities coming into play is what spooks some of the holders of cryptocurrency.
It's a great question. That is a part of what cryptocurrency, a part of the benefit that cryptocurrency has, because it wouldn't be subject to banking regulations, it wouldn't be subject to government regulations. In practice, though, most of the people that I speak with, and I don't think they're just saying it to me because I'm an attorney, they are clamoring for regulation. Most people who are in the space want clearly defined rules. If they didn't care about it, they wouldn't be taking their Delaware LLC and moving it over to the Cayman Islands. They want a system that makes sense for them to operate within the sphere. And I think the people who just want to avoid banking, I think they are in the minority, at least in this point. When it first started, that was probably more of a driving force, but in today's world, it's not as prevalent as it was.
Yeah, I do know that some international banks still charge huge fees for currency transactions. So this would be
sure. Thanks, here.
What about central bank?
Hi. Yes. Your question felt to me like we're asking about blockchain separate from the application of cryptocurrency. So it's interesting that in the answer it got mixed back in because blockchain stands by itself as a technology without cryptocurrency. And some of the things that are problematic again, consumption, for example, there are not much there. What efforts do you see to separate those conversations so that the problematic parts of cryptocurrency don't affect this view? Do they exist, or has it all become one conversation?
I mean, my pretty cynical view is that crypto kind of has always been able to reinvent itself throughout the various years, whether it's, I think in 2017 it was blockchain was the big hype, and then in 2021 it got somehow rebranded to like Web3. It was the next coming of the internet, and in a way I think one of the most prevalent use case that we've seen of crypto had nothing to do with blockchain. It was mostly as a speculative instrument. And whether it traded on the blockchain or not didn't really affect, the price of the dog that everybody was buying. And so my kind of cynical view is that a lot of the use cases we have seen is just kind of speculative. And I don't deny that there is a lot of promise with blockchain technology. It's just seemed that nobody's been yet able to find a use case that has spurred mass adoption. I think, I guess what would you say is the mass adoption use case of blockchain?
Supply chain.
How many?
Sorry.
Or maybe like I would contest that it is currently in mass adoption, because I think a lot of supply chain. I guess I don't know how prevalent it is, but there are other promising use cases like gaming, a lot of payments, but I don't think a lot of people buy crypto for those reasons. They buy it because they think that the price will go up.
I think that's an excellent question, by the way. Thank you for sharing. What I would think is what sort of the next frontier for use case for blockchain technology, forget about cryptocurrency, is, as you said, payments. Payments and, for me, real estate transactions. Are there any title people in the room? Trigger warning, we're not going to like room. When you talk about payments, or for example, I'm a mergers and acquisitions attorney by trade. If I have a client in California who's doing a deal with somebody in France and they close a deal on Friday and they try to wire money on Friday afternoon, well, guess what? They're not getting the money until Monday, and now there's 3 days where the moon can crash into the earth, and then what happens? That's a problem. With blockchain technology, you solve that problem instantaneously. Payment goes from point A to point B across the planet in no time at all, and poof, problem solved. That's one thing. You're starting to see some of that, but again, when you're talking about international transactions, you need kind of both people on the same wavelength to do that. And with respect to real estate transactions, I hope this comes forward. I think insurance people are going to have a thing or two to say about it, but if you showed me the Mona Lisa, the real one, and a fake one, I would have absolutely no idea which one is real and which one is not. And you could tell me, how am I supposed to know? I'm not an art curator. But with the NFT, the digital version of the Mona Lisa, I can, in 2 seconds, tell you if it's real or if it's not real. It's all in the code, and it's obvious. Same concept applies to real property. The days of having to buy title insurance to guarantee that what you're buying is what you think it is, to me, is an arcane, outdated concept. If it's on the blockchain and you can look exactly what the boundaries of the property are, who owned it before that person, what did they pay for it, it's an instantaneous thing and it's progress, and it cuts out expenses that we have when we buy homes. It makes it easier, and it's unchangeable. It's not subject to, oh, we had a flood in the building and we lost the record. Sorry. Those days should be over. I think that's going to be an immediate change in the technology.
So there are stories claiming that the central bank digital currency is an attempt to take over the market and shut down private digital currency, and in which case the government will see all your transactions. What are your thoughts on that?
It's definitely the fear of the CBDC, the central bank digital currencies. That's an excellent question. I know that
Can you repeat the question?
he asked about central bank digital currencies, a CBDC, which is basically a government-backed version of a digital coin. You've seen some governments experiment with them kind of here and there. The United States issued an executive order over a year ago. I don't remember exactly when it was. was, but I sat and I read it, and basically they asked for comments from people to gather what they thought would be pros and cons of the tech. And one of the biggest fears of that is, you hit the nail on the head. One of the purposes of blockchain is sort of anonymity, as you were suggesting. With a CBDC, they'd be able to really see who's doing what. And the theory is that they could stop you from doing it, they could seize your funds. It's almost the inverse of the ethos of what cryptocurrency stands for. I know some prominent people in government steadfastly against it, where other people are at least more curious and kicking the tires. I can't really predict what the United States is going to do here. My guess would be they would not adopt it simply because there aren't enough people on Capitol Hill who really understand in detail what that means or what cryptocurrency and blockchain can do, at least not now, but we'll see.
One note on just the anonymity of like transactions on blockchain, I would say that's kind of a false narrative out there, because actually blockchains are very traceable. It is in fact cash that is very hard to trace, and there are track and trace companies like Chainalysis that have basically mapped out most of the Bitcoin network. So if, say, you're dealing drugs and your Bitcoin gets seized, like it's very easy for the government to kind of track the transaction history because it's all on the blockchain. So I would say it's only really a matter of time, and actually a lot of the it's actually not good to do that type of stuff using crypto.
In fact, just one more point on that. Tracy's exactly right. A couple of weeks ago, and this is a third rail issue, I'm just using it as an example, please. A couple of weeks ago, the Wall Street Journal had the report that Hamas had raised $130 million using crypto. And that became like a factual story. Everybody else said, well, the Wall Streat Journal said it for its fact. Senator Warren said, see, this is bad, crypto is bad, let's do it and nip it in the bud. And it just wasn't true. And in fact, Hamas came up and saying, like, please don't send us money via cryptocurrency. It's not a good mechanism for doing those kinds of things. In some ways it can be, but globally speaking, it's just not.
So, Tracy already made the fact that pointed out to make that no, anonymity is not the intent of the blockchain, not the intent of cryptocurrency. It's a very much a side channel addition, and by its very definition, it's all about traceability. It's all about verifiability of entries into the blockchain. And that's what blockchain is. It's a decentralized ledger of transactions. Decentralized means anybody can verify a transaction. So by its very nature, it must be traceable. So
anybody can look right now at my wallet and see what I own, what I've sold, what I bought, all this stuff. Except if it's a private. That's exceptions.
Correct, but there's some centralized party that runs the private blockchain, and then if they get subpoenaed or the DOJ comes knocking, I'm sure they'll comply. So, any other questions?
This is kind of a softball question from my partner, but 20-something years ago, I walked into an office and someone was interviewing me for a job and they asked me about Napster. And luckily, someone the day before handed me I think it was a magazine or something about Napster, and I was able to say my opinion and copyright issues or whatever. And at that time, we all wondered about where is the internet going to go, right? The thought was it was good for ripping off music and for porn, basically. And the sock pop that came along eventually after that. So I'm interested, in this audience here eventually, because we're talking about AI today, we're talking about crypto, we're talking about blockchain. How those two are going to be married. There are years in this room who are going to have to think about how information is going to be used in the context of the blockchain, the universe, talking politically with companies. And so as lawyers looking at this, we're trying to think about that ahead of the game, not where crypto is and all the bad things that happen. So, from Kyle's perspective, I think he would say, this is why we're doing this. From Tracy's perspective, she's right to be able to look at SBF and say, I have to look this up. So, even Kyle's side, because I think that, I agree, we really talk about this all day. I'm interested to hear what was it, Tracy, that made you think for everybody else, whether it's, probably SBF, what was it that made you think something's up?
Oh, I don't think I can take that much credit other than, I think that the SBF, with Sam Bankman-Fried in particular, a lot of people, myself included, kind of got the fraud wrong, in that everybody thought that he was running this crypto exchange, and then he had this hedge fund market maker called Alameda, and at least in the United States, you can't really be running an exchange and having your own market, like trading firm, trade on it, because that's not allowed. And everybody thought, but in crypto, this was allowed. And Alameda, for the longest time, was one of the market makers on FTX, and everybody thought, he's sketchy because maybe his hedge fund is front-running the orders on the exchange, maybe he can see people's orders, and he has an unfair trading advantage. But it turns out the fraud was several levels more simpler, and that he was just straight up embezzling money from the exchange. And so I don't think I can really take credit for really knowing what the fraud was, but I do think, at least in my role as a journalist, it was to pull on loose threads. And so, for example, when my colleague was leaked a version of Alameda's balance sheet, and to have information about a trading firm's assets and liabilities and their largest positions was very valuable. And so we ended up writing a story about that, and then that kind of unraveled a series of events that, to be quite honest, I was very shocked that FTX was committing this massive amount of fraud. But I guess looking back on that experience, I think the best I can do is kind of pull out a loose thread and see what happens. And usually in the case of, if you look at historical frauds, it's normally you get the big stories get broken in increments. It's like, okay, you have this little piece, and then you tug at it, and then that unleashes like 3 more things that you could tug at, and then the whole thing kind of comes spiraling down. What is very interesting about crypto in particular is that, first off, just the speed at which this thing collapsed. Even, I think Theranos, that took months and months of stories. And also, in crypto, the industry is very incestuous in the sense that the risk pillars are not spread very far apart. Normally, if you want risk to be managed in a way that if one big domino falls, the next domino is spaced far enough that it doesn't topple. But in crypto, it is kind of like all of the dominoes are together. And so when you had FTX declare bankruptcy, it was then like, oh gosh, all their lenders then declare bankruptcy. And then all of the funds that potentially had assets on FTX then were like, they were now couldn't access their funds. And so, in a sense, part of how big the collapse was a function of just crypto itself being not very, everything kind of correlated with itself.
It's a great point, and really quickly, before I continue on to that, I'm going to go back to what I said before about nothing here being legal advice. If you did it, and your lawyers say don't take the stand, do not take the stand. And if you do take the stand, I don't know, I can't recall, it's not going to win. So, there.
You do not want to be cross-examined by an assistant U.S. attorney.
Right.
It's not good.
But one thing that I think is very interesting about the SBF trial is that it was so big, billions and billions of dollars. I mean, he was the guy. He was the face of this industry for a while. You have arenas being named after FTX, and he was the golden child. And for it to collapse the way it did, and for the prices of Bitcoin, Ethereum, and all these other assets to have not just completely bottomed out, I think speaks to the longevity of this technology and of cryptocurrencies in general. Didn't collapse then we're probably going to be okay. Probably, not investment advice. I remember back in 2008, Lehman Brothers collapsed, stock market didn't go away, Bear Stearns collapsed, here we are, buildings on fire. So I think that people, they get too focused on the negative. We're circling back on this. And I actually have a question for Tracy as a journalist. When you have these kinds of ideas, all people see is SBF. People are afraid of crypto, they don't understand. People see Jaws, they won't go in the ocean because they're afraid of sharks. HAL 9000, they're terrified of AI. What is this going to mean? It's going to take over my car. I can't have a self-driving car. It's going to take me to Australia. How do you, as a journalist, cut through that level of lack of understanding, or even worse, misinformation? It seems nowadays, back up 20 years ago, you would watch the news, read the paper. Oh, now I'm informed. Now I understand what this thing is. How interesting. Oh, how great. Let me talk to my friends at work tomorrow about it. That doesn't happen anymore. Now it's, well, this is what I think. I'm going to watch this show. I'm going to read this paper, and it's just going to echo chamber what I already believe. So how do you, in your position, how do you navigate that? It seems really difficult.
I really think that people that get interested in crypto and stay in crypto, it's a very self-selecting group. Like, if you are somebody that just has no tolerance for fraud or sketchy people, those people tend to not end up in crypto. They're just not, it's just not their vibe. And so there's a saying in crypto where, if you've been in the industry for a number of years, it's almost natural that, like, you got scammed at one point, or somebody, made a transaction and lost hundreds of dollars, sent to an unknown address, and it kind of is the price of admission. After a while, you get very, very skilled at, because the number, sometimes I get just standard phishing scams, from just an email from somebody in Nigeria asking you for money, but after being in crypto, the sophistication of the scams and people trying to defraud you of money it's just next level. It's like they just really think it through. It's very social engineered, and after a while, you just kind of develop trust issues, and you have to second and third guess everything. And so, in a way, people in crypto, at least if they stay in the industry long enough, they develop this very robust tool set of how can I avoid getting scammed and losing all my money. And in a way, it is kind of a sad state that, because people just get scammed all the time, and there's no real way to kind of prevent that. If you just even, I don't know if any of you guys are addicted to Twitter. I mean, I am, but just the number of crypto spam bots are just out of control. And so I do think crypto, it is still very much a Wild West. That it will get better with time, but currently I think, you have to be willing to put up with a certain level of scamminess to kind of be in crypto. But I do think people who try crypto, I would encourage everybody to, make a Coinbase account, buy, $20 worth of a cryptocurrency, maybe go buy an NFT, set up a MetaMask, and there's kind of, I think once people start playing with it, they're like, oh, this is cool, this is interesting, and then they get kind of sucked in, and then maybe they get defrauded once or twice, but then they kind of just keep on, they've gotten their feet wet.
That's pretty much exactly how my journey went. I started riding my base, I bought some Ethereum, I bought an NFT, and then I lost it. But not anymore. Now I know the marks of the scam. Burgeoning technology, it's bound to happen. It's with anything else. Any other questions before we get on?
Thank you so much.